Hi everybody, this is Gary Dean and this is our nightly video report for Thursday, April 14th, 2016. So today was pretty much a nothing day. Really the main thing that I took away from today is just how it's it's kind of hard to explain. It's almost like they're scared to see this market go down at all, and any kind of even intraday dip is being followed by like a panic buying, and just the fact that we're seeing this panic buying at where we are right now, and I think really the best chart that I'm going to be able to illustrate why I'm saying this, it's really, I'm kind of scratching my head on why we're seeing this. So I'm going to go through some of the breadth charts because yesterday they weren't really updated, but you can see that the advanced decline, we're like I said at levels we've never seen before, but yet we have the S&P that still has a ways to go before it's at the all-time highs. Now, this is the chart that, like I said, it really tells a story. And this is the VIX, the colored candles, and this is the S&P. So just look at where we are with the VIX. Here's the VIX right here. This is all the support. This is each time we've been down here. So this is support going all the way back to 2014, and it's pretty heavy. This is resistance for the S&P. So this is where I'm saying it. Just I'm a little confused on the panic buying when you have the S&P running into support and the VIX running into. The VIX running into. The S&P running into resistance as the VIX is running into support. Now, these red lines are, each time we kind of dipped into this zone right here and we had a bullish divergence. Now, again, this is a daily chart. So here you can see we made a big spike down on the VIX here. Then we were making lower lows, and the MACD was making higher lows. So that's your bullish divergence, where you're in the support zone, and from here we saw the S&P dive. Now, this was not a bullish divergence, so this is all chop zone here. But here you see it. We had a drop, and then from there we made lower lows. And this was where we had the S&P that was at resistance. You had the VIX was at support, and from there we saw a drop. So each time this recycled, and we've seen this same type of pattern forming, where the VIX is at support as the S&P is at resistance, and we get this bullish divergence, we get a drop. Now, this is the one where we had the big rally, and you can see we had the bullish divergences right into the support area, and you saw the S&P go up a little bit more, but from there, that was the top, and then we took out the previous lows. We have the same pattern right here. It's and here you can see the VIX is approaching that support, and this even sorry about that. And this even could, the resistance part can even go lower than where this is right here, because this is all resistance all down here. But let's just leave it at where it is right now, and this is my point where the panic buying when we're here doesn't, I'm just kind of scratching my head on what's the end result that they're trying to do. Are they trying to get everybody in to cause a blow off top, or I'm not sure. But in any case, I think this is pretty important to look at. Now, just looking at the regular put call ratio, again, we have this big bullish divergence on the put call ratio. Well, it's negative for the S&P, and we're still we're at pretty low levels. And then finally, we have the bullish percent, where again this kind of has flattened out because it can only go so high before it has to flatten out. And each time we've been, at these things where it's flattened out, we've seen some kind of top. So it's things are really exhausted on the breadth part of it, and the fact that we've rallied 40 points, and yet this underhanded, this invisible buying that's going on with every dip intraday it's it's kind of mind blowing. But it's the longer they maintain this type of say panic buying with every drop, when it does turn, you're probably not going to get any breaths to the downside, and we're going to go straight down, and it could be in a fashion that rips everybody's face off, where nobody really saw this coming. So I don't know when that's happening. I mean, like I said, I've been saying this for a while that we've been exhausted, but until price breaks, the bulls are in control, but it just does not make things any safer to be buying. You have to be on your toes, because you don't know when they're going to pull the carpet out, and when they do, there's a lot of room before the first layer of support comes. So this is the channel for the ES that I've been showing. You can see we're very, very close to it right here. Are they going to break through it? Well, if they do, they got to battle this resistance. They got to battle this resistance. They got to battle this resistance. So even if they break through this channel right here, they still have so many layers of resistance to get through. And that's, again, as we're very, very overbought with bearish divergences. So if they are going to follow the channel, then the next move is coming all the way back down below the 1800 level. I don't think anyone's really anticipating that right now. As a matter of fact, I'm seeing targets of 2250, 2500, 2600 on the S&P. So this rally has done its job, just like it's done its job here. Nobody expects we're going down. Everybody's looking up, and nobody's going to be short enough, or they're going to be overexposed to the long side when the big move happens to the downside, if it plays out. But from everything that I'm seeing, I do believe it's going to. It's just a matter of when. On the regular charts, nothing really to go over here. Just a 23% retracement is bringing the S&P all the way down to the 2022, which the bulls have not had to handle that kind of drop, and this is just a bare minimum drop as a retracement. So again, the higher they go without any kind of 23% retracement, the farther down it goes. And to see a 64-point or 66-point drop, that's going to feel like a crash to most bulls, because for the last 2 months we've just been going straight up. But the first thing the bears need to do is get it through 2075, then this 2060, and then that's when we could see momentum building up. But this is all resistance up here, but the bulls have some support here. So the bears have their work cut out to break through it. But if the support levels start breaking, then it's going to be panic selling, because the what am I like the liquidity that's going in right now is just, it's not a lot, and most of this is being done by computers and overnight trading, and causing these mini short squeezes. And like I said, when things start to drop, if there's not a bid underneath it, we go down 3-4 times faster than we went up. So nothing's really changed. Bearish divergences on the hourly chart, bearish divergences on the daily chart. This is the channel that's running for the S&P. You can see we're right here. So there's a lot of resistance above. Like I said, until price reacts, the bulls are in control. But I would be more on my toes, expecting this drop to hit, because it could happen anytime, and I have a feeling it's going to take a lot of people by surprise. So with that, have a great night, and I'll talk to you guys tomorrow.